Hi, everyone. Mike White here. Welcome to this week's blog post. We're seeing a tremendous amount of purchase activity, much like we had anticipated coming in, uh, between new listings hitting the market, new buyers coming out, buyers that we had in the past before the holidays that took a break are coming back. So there's a huge amount of purchase volume out there, and the numbers bear it out. Purchase activity has been, or purchase loan applications have been really strong. And at least across the numbers that I check with my clients, pre-approval numbers have been significantly higher. And what we're seeing, and again, it's just across the people that I am working with, we're seeing a resurgence in the large number of first-time home buyers either entering the market or coming back to the market, and making the commitment to buy that first house. But the challenge that I'm seeing, and some of the things that we've been able to remedy out there, is making sure that those buyers are getting all of their options, that they're understanding the process and what the market really looks like. And I think it is, common that there are loan officers out there who don't take the time to explain options or understand their market or convey that understanding or that knowledge of that they possess to their borrowers, because I think it's a little bit, incredible that across this country that loan officers are preparing, pre-approval letters that contain seller concessions. I mean, let's be honest, I don't know of many markets right now where sellers are even remotely thinking about accepting offers that require seller's concessions. And the challenge with that is it's leaving a lot of these first time buyers, really disappointed, because all they're doing is going out and seeing property and making offers and not getting accepted. So when we see things like seller's concessions, or when we see that the person doesn't have the money, it's incumbent upon a good loan officer, a true professional, to explain options to them in a meaningful way. Because not only is somebody who is short on funds for down payment and closing costs in a bad position to try to win a negotiation, but again, they're often limited to what they can do. They're kind of strapped in. If they find a house that's $5,000 or $10,000 more, there's no wiggle room for them. And we also find that many of those first time buyers who are out there, because of either limited funds or credit, are dealing with only falling into certain types of loan programs. And I think it's important that it's not just going through the pre-approval process and saying, hey, we can do this loan or we can do that loan, but also preparing that borrower for what it is that they can do, because they're not giving their options. And some of it is kind of incredible to me that it's not happening. And I'm seeing my loan officers who are getting referrals of people that are, had they been given the proper information back August, September, October about the things that they could do to improve their situation, they'd be in a much stronger position to buy that house now. And what I mean by that is many times it just comes down to a little bit more money. And in cases where you have families, and let's just take a, husband and wife and two kids, there's no reason that if in August or September, if these people were tight on funds coming in, that we couldn't look at one or both of them taking on a part-time job, even at $10 an hour. Working part-time jobs between the two of them could have simply increased their cash on hand by $1,000 or more a month. Add into that the recent stimulus that we're getting and the proposed stimulus that's coming in for that family, they could see $5, 6, 7, $8,000 in additional stimulus money being added to their coffers. And along with 1,000 or two a month that they've generated, we're now dealing with a completely different ballgame. Now we don't need that seller's concession and we can compete. And sometimes it's not just the cash. Sometimes cash may not be 100% of the problem, but it can change also the loan to value. Maybe we get somebody out of USDA and they can go FHA, or instead of FHA, they can go conforming. Instead of conforming at 97, they can go conforming at 95 or less, or even as they're waiting to find that house, continue to save money and continue to be in a position. And what if that loan to value is now 89? Or maybe they could change their price range. Also take into consideration your DTI with something as simple as a car payment. And this is one of the things that people don't pay attention to. It happens all of the time. That $300 car payment, well, that represents about $70,000 in buying power on your DTI when it comes to mortgage. So what if they have that car payment? And what if it's $300 a month? And what if they've only got 20 or 24 payments left on that? It's not just about using that extra money to increase their down payment or to cover their closing costs. But what about paying down or paying off that car loan? How many people do you have that for a $300 car payment would love to have $70,000 or so more in purchasing power on their next home? And the answer is, I'm sure, quite a few. And how many would that change their perception of what they're looking at and their ability to make offers? And the challenge is, we sometimes see loan officers who go right to the easiest solution, but don't entertain what the other options are. And to me, options are everything. I'm not saying that your borrowers are going to jump in and say, yeah, we're both going to go out and get part-time jobs and we're going to save all this money and blah, blah, blah. But many people are out into this market, buyers, especially in this seller's market, they're having trouble. They're not going to find a seller's concession for the most part. And they're limiting their options. And if they knew that there was something they could do, if they've been looking since, again, August, September, October, November, we're in January, approaching February. If every month that goes by while they're looking to buy that house, they're banking another $1,000 or $2,000, how does that change their circumstance? And what happens? Maybe they do have to wait until June or July to have enough money together. But according to many reports, the next wave of, well, the recent wave of stimulus has already been distributed. So they've already gotten that $600 a person. There may be another $1,400 on the way. There's also the situation that we're looking at when it comes that they're doing their taxes. And there's that tax refund that is likely to come for many of these people to be added into the mix. So as always, think about it. Make sure that you're presenting all the options. If you're working with first-time home buyers, or you're seeing an uptick in first-time home buyers, or even people who are going to be selling their houses and buying another one, look at all of their options, look at all the circumstances, and don't be in a position where you're limiting their opportunities because you don't think that they may go out there and take that part-time job or earn that extra money or take that stimulus check or that tax refund and apply it to their circumstances. Remember, options are everything. And as always, if you have any questions, you can reach me at mike@imtcoaching.com. Take care.